The housing market is aiding the economic recovery all over the United States. How is that impacting Silicon Valley home buyers and sellers? Coming up on the Silicon Valley Snapshot. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the last week here in September of 2020. My goodness, we're at Q4 already. We're at Q4. I mean, I feel like it was just yesterday. I was doing the first snapshot from inside my home during SIP, and now we're here, and the housing market has really been aiding the economic recovery. And we're going to get into some numbers here, some facts and figures that are, quite frankly, I mean, they're startling. For anyone that has been watching these videos for any period of time, especially for the last 6 months or so, you'll know that what we expected and what reality is today are two very different things. And a lot of that is due to the housing market and the strength of the housing market. But before we begin, if you are a home buyer in today's market and you are looking for the most comprehensive data set for the area that you're looking in, go ahead and text the word data plus the number plus the zip code or the area or the neighborhood that you're looking in to the number down below, and we'll get you a very comprehensive data set, very similar to what you're seeing here on today's snapshot for the area or the zip code that you're looking in. And if you're a home seller in today's market, now more than ever, pricing strategy is imperative. And so you want to make sure that you're making the most educated decision possible when pricing your home to introduce it to the market. So go ahead and text the word data plus your property address, and we will get you the most comprehensive and robust data set for your particular property. Now, everyone, let's get into the economics of it all. And before, we're going to share the most recent housing data. You've been watching these videos for any period of time. You know what's coming. Like, you know what's coming. Inventory's low, demand is high, and the housing market's on fire. But if you are new to this video or new to this channel, I want to share with you some unemployment news that honestly I was really fascinated by. If you look at the BLS unemployment rate in March of this year, 2020, we were at 4.4%, and obviously in April, boom, spiked up to a 14.7% unemployment rate. Now, when you compare that to where we are today, which is below 9%, we're at 8.4% that was reported in August, okay? When you look at other recessions or other economic downturns in the United States, we're talking major recessions. We're talking Great Depression. We're talking Great Recession. We're talking the 1980s oil recession. Great Depression, 108 months we were above a 9% unemployment rate. The Great Recession, we were at a 30-month unemployment rate greater than 9%. Y'all should remember the Great Recession. That was like literally 10 years ago. 1980s oil recession, 19 months over 9% unemployment rate. The 2020 recession, 4 months. COVID recession, 4 months. That's fascinating, right? For all the naysayers out there that were screaming doomsday due to unemployment, well, unfortunately in Silicon Valley, the reality is, unfortunately, however you want to spin it, right? The reality is that the vast majority of people who are unemployed were in sectors that honestly never had a chance of buying a home here in Silicon Valley to begin with, at least not in the major counties here that comprise Silicon Valley. So to expect that the high unemployment rates, right, were going to impact the housing market was naive at best and uneducated at worst. But now as we move forward, right, do we see a surge in unemployment in other sectors? Well, that remains to be seen, right? And we don't know what the future has in store for tech companies. But when you look at the overall landscape of Silicon Valley, tech driving the market here, driving our economy, I find it hard to believe that we're going to be in a situation where tech companies, have mass layoffs or even minor layoffs, to be honest. I have many friends who work in tech here, and some companies are back to hiring. which is crazy, right? It's crazy to think, but and that a lot of companies are back to hiring. By the way, my team is hiring. If you're great at social media, reach out to me because we need help quickly. Okay, so unemployment projections. If you look at the unemployment projections, currently we're at 8.4%. The unemployment projections for 2021 are at 6.3. This is from the Wall Street Journal, by the way. 2022, 5.2, and then hopefully by 2023, we're at below a 5% unemployment rate. Guys, we're talking about families here. We're talking about jobs, and I definitely do not want to diminutize the severity of what's going on right now. These are people's lives who have been impacted, families who have been impacted. But the reality is that the fearmongers use the data against you, right? Don't allow them to do that because these are the facts, right? These are the facts that we are, at this point in time, we only experienced a 4-month unemployment rate equal to or greater than any of the other recessions. We are now below that 9% threshold, which seems to be kind of like the cutoff for economic impact. And we weathered that storm. As a nation, we weathered that storm. And more importantly, for those who are watching this video, in Silicon Valley here, we weathered this storm. And so that's on the unemployment side. Let's look at a couple other things here because I find this fascinating. Projections on future home prices. If you look at this chart, you'll see for the next 12 months, or within the coming year, or within the next 12 months, we are looking at most of the major pundits projecting appreciation in the home sector, right? This is after 4 strong months this is after 4 strong months in the housing market. And the housing market has been driving. It has been the driving force, in my opinion, of the economic recovery. People still want to buy. And yes, their priorities may have shifted, AKA they no longer want to live in San Francisco and now wish to live in Danville, right? Perfectly normal. It's understandable why people would want more space and are now willing to lengthen their commute because they may not have to go into work at all or as often, right? However, the juxtaposition between where we were 6 months ago to where we are today, it just shows you how quickly things can change, right? So for the better or for the worse, it's always important to remember that what we know now, what we know to be true today, is not necessarily what's gonna be true in, say, like 6, 12, 18 months from now. Because 6 months ago, Fannie Mae was projecting a 0.4% appreciation on home prices, and now they're at 4.4. Zillow was expecting or projecting a negative 3%, or basically a depreciation of 3% in the housing sector. They are now at 3.6% appreciation. So there's a 6 points, almost a 7-point spread there based on what they were projecting and now what they're currently projecting. And so as we move forward and move into the next couple of months here, especially if you're a home seller in Silicon Valley, I want you to remember that the going is very good right now. Right. If you are a single family owner in Silicon Valley and you have been thinking about selling your home, when things change, they change quickly. And so, yes, that's what they jump, but they can just as easily jump the other way, right? I don't expect that to happen. If you look at the data and you look at basic economic principles of supply and demand, there just doesn't seem to be anything that screams to me there's going to be a major increase in supply over the next 12 months. Vice versa, I don't see anything at all, especially now with this reassuring unemployment news. I don't see anything to insinuate that the demand is going to wane either. And so if that continues and we continue to see this high demand, low supply, I just don't see the tables turning. But that being said, right now, if you're a home seller and you're like, hey, Danny, I want to sell in the next 12 months, well, waiting until the springtime may not be the best strategy because in 6 months from now, we don't know what the market's going to be like. But right now, in most areas in Silicon Valley, the odds are in your favor and the market is extraordinarily competitive right now for home buyers. Conversely, if you're a home buyer, looking at the next 12 months and trying to play the game, I don't know when it's going to get better for you guys. Really. I don't really know when it's going to get better for our buyers. And so if you're buying an investment property, mazel tov. If you're buying a personal residence, really, my suggestion right now is just wait for something that you love, and then, just revert to the fact, or think of the fact that 12 months ago, your interest rate was a point higher. And yeah, the market may have appreciated a little bit. Yeah, the market's a little bit more competitive, but if you lock in a rate today, you're actually paying less monthly than you would have a year ago, right? In most cases, literally, if you dissected 100 case studies in the Silicon Valley right now, and you said, hey, home buyer, this home that you bought today, the home next door sold a year ago, and if you took that comparable, you took the mortgage amount, and you took the interest rate from last year, applied it to last year's home, take the interest rate to this year, apply it to this year's home, over 90% of those case studies guaranteed the buyer today is paying less monthly than the buyer did a year ago, even though the market is extraordinarily more competitive for buyers right now than it was at this same time last year. And just to piggyback off that or prove that fact, you look at the data and you look at the numbers. I'm just going to go through these real quick, because if you watched last week's video, you can watch last week's video. I went in depth, but there's a 47-point spread right now versus last year in Santa Clara County, meaning that it's right now there's 20% less homes, 27% more buyers, more pending sales right now in Santa Clara County. When you look at San Mateo County, there are 10% more homes, but 40% more buyers. So there's a 30-point spread there. Again, it's tough for buyers. It's a tough market right now for home buyers. If you are in San Benito County, my goodness, a home buyer last year experienced a much more tolerable market. 56% decrease in listings, active inventory, and 106% increase in pending sales. 160-point spread on that in that market. In San Francisco, obviously, if you've been watching these videos, you'll know that the San Francisco market is in trouble, and that's something that we've covered in many videos previously. But the numbers, the data here doesn't really give you the full picture, because a year ago in August, or September rather, the market was already bad in San Francisco. It was not what the San Francisco that we remember it to be, right? Now we're looking at this data, and yeah, there's a 50% spread. There's almost 100% more homes on the market. So almost double the amount of homes, and the number of buyers and the number of pending sales is up 50%. So buyers are still buying, and I think that's important to realize in San Francisco. People are recognizing the opportunity, and they're going in there and they're buying. I have a funny feeling San Francisco will be back in short order. I just don't see this narrative playing out for more than 12 months. But let's continue to monitor, because honestly, right now is a perfect time to buy, especially an investment property in San Francisco. That market's going to come back. Eventually, all of the companies that are doing the politically correct thing and the correct thing to do, period, right? Health-wise and political-wise, however you want to spin it. The reality is that it's safer for workers to be at home right now, period, right? So once that narrative changes, once those policies start to revert back to either mixed work from home and work at office, or hey, we will pay you X% more if you come work at the office, or hey, we will give you X, Y, and Z incentive bonus, massages, back rubs, dinner, lunch, breakfast, caviar, champagne, whatever they need to do to get you back in the office, they're going to do it. And when that happens, San Francisco will be back. Contra Costa County, negative 40% inventory and a 30% increase in pending sales. That's a 70% spread. Oh my God. And Alameda County, finally, to wrap things up in the Bay Area here, negative 30% in the inventory, on the inventory side of things, and a 27% increase in pending sales. That is a 57% spread. The housing market is leading the economic recovery. And this data proves it. especially here locally. I mean, the housing market is really driving the economy here, especially with California's and Santa Clara counties. I would say higher regulatory standards. Take that as you may. A lot of businesses are hurting right now, but the housing market continues to drive, in my opinion, the economy here. And until the rest of the businesses are able to open back up, people are saving their money in droves, and they're like, oh my goodness, now I finally have that down payment to put down on that house. Now we finally feel like we have that safety net, honey, to go out there and buy that house. Honestly, I think this is what it is. I think this is a big part of it. And it's something that people aren't talking about. It's how much they're saving right now because of COVID, right? They're at home. They're not spending money on dumb stuff, right? They're going out there and they're buying a home for themselves and for their future. And if there's a silver lining to all of this, that's that. So that's it. So anyways, everyone, this is Danny Gould with the Selling Silicon Valley Group. Again, if you are a home buyer in today's market and you're looking for a comprehensive data set in the area that you're looking in, go ahead and text the word data plus the area or the zip code that you're looking in, and we will get you a data set for that area or that zip code. And if you're a home seller, go ahead and text the word data plus your property address for a comprehensive guide on how to properly price your property and the most robust data set for your particular home. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.